Hi guys, it's Cryptobirb agent speaking and welcome to today's special Friday webinar. It's very special because this is a grand opening for our 500K celebration congress. 14-day free trading congress starts right now with this very opening webinar. Guys, this is my greatest pleasure to welcome you to today's webinar, today's stream, today's session, because the next 2 weeks, next 14 days for everybody who's participant to the congress, this is going to be something really magnificent, something really amazing, exciting. You're going to get insane amount of knowledge, basically, which you're going to be able to utilize in your own way to level up your trading game. This is, guys, something very exciting. And you're going to hear about Bitcoin, you're going to hear about Litecoin, about Ethereum, about the on-chain analysis, technicals, and how the Congress is going to look like. All of that, guys, to get you safe, to get you a lot of money, hopefully, and pretty much help you learn how to build and generate and secure your wealth. If you're ready for the ride, if you're ready for the grand opening for the Congress, guys, make sure you stay tuned because we're going there right in a moment. That's it. 14-day free trading congress is starting right now. Grand opening is in. Guys, let's kick off with a very casual check for Bitcoin analysis, for Bitcoin technical analysis and on-chain overview. We're going to talk about Litecoin. We're going to talk about Ethereum. We're going to talk about the main points for you to expect throughout the Congress, all the streams, all the amazing broadcasts, all the amazing activities and events that you're going to get. It's literally mind-blowing. Let's get straight to the point. To start with, Bitcoin. We've been seeing some sort of intraday volatility yesterday or 2 days ago, whenever the Evergrande news came out. Of course, right? There was a lot of confusion. There was a lot of nonsense, and actually two-sided, like very antagonist, opposite kind of like news flowing out from the market. Now to the market, you were seeing, like one media source's side saying that Evergrande will not pay the debts. The other side was saying that Evergrande is ready to pay all the debt. Like a lot of BS, pretty much. No matter how you refer to that, this was a lot of BS. Basically, a lot of noise, a lot of confusion. And all that I know for sure is that whenever there's a lot of noise and confusion, or should I say, the market manipulation has to happen somehow, because of course there's manipulation. It's real. This is not some conspiracy theory. Markets are manipulated. JP Morgan manipulates gold market. Gold markets like for years. This is something crazy. Bitcoin is being manipulated, and Evergrande news, just like China ban news for Bitcoin, Evergrande news is there to hit and manipulate global markets. So after the news came in, you saw S&P 500, Dow Jones, industrials crashing. It was not really like some insane crash, but it was some liquidity hunt. It was taking off some bit of the leverage of the market to make the market healthier, tiny bit, to prepare for further upside growth. That is the way I take it. So whenever you see some sort of confusion in the market coming from the media, this is there to manipulate it. This is there to get you off your track, off your path. This is literally to flush the liquidity down the toilet in order to make the space for the big players to step in. This is how it works. This is how it works usually. You have to engineer the order books of the exchanges on the futures side, on the spot side. This is all kind of like true. So knowing of that, how does really this Evergrande news become relevant to the long time frame perspective that we are seeing in Bitcoins ever since the $29,000 lows and the beautiful perfect bounce of well, the 50-week moving average? Well, the answer is that it is completely not relevant. It's completely irrelevant. It does not change the fact that Bitcoin is still extremely bullish. Okay, we keep making new highs. We keep making new highs in the previous weakness territories. Of course, you have not seen really the very powerful candle close through the all-time highs, which are the latest ones, which is a bit, tiny bit concerning on the very micro time frame, but it's basically still noise. What matters is that we keep printing the new all-time highs one and second time. Okay, once and second time. This is This is unprecedented event. The all-time highs do not happen just like that. They are not the daily thing. They happen once in every month, once in every couple of months, once in every half a year or a year. At times you have to wait 3 years for the all-time highs to kick in, or 2 3 years, whatever. This is some unprecedented event. Okay, it's not really an easy thing. And we have seen, of course, this powerful upside thrust breakout out of this triangle pattern, which is bounded by the upper declining resistance, the diagonal, and the upper, or should I say the lower but ascending triangle base, given by the 50-week moving average. Okay, so whether you draw a trend line in here, like, it's completely irrelevant. Again, doesn't matter, because what matters is that this average trend line, this average trend price of Bitcoin, is showing you the floor of the triangle. So it is clear consolidation, contracting consolidation. So another check of the list that I gave, like in June, this is pretty exciting. So the breakout is in, the new highs are in, price action is confirmed, the high, the low, the lower high, higher low, but then the new high, higher high, so it has to form the higher low somewhere. I don't know if it's going to be at $59,000, at 58, or it's going to be like immediately in here and fly past. Nobody knows the future, to be honest, right? You can anticipate only knowing some set and predictable human behavior, and the market cycles. When you combine all your technical knowledge into that and implement it, only then can you really tell, okay, that basically this is what is not necessarily like any bearish per se. Okay, this is pretty cool. This is pretty cool because this confirms the long-term market strength. The long-term market direction is upwards. New highs are very significant. On top of that, this entire wave 3, knowing that this was wave 1 of Elliott, Elliott wave principles, would tell you that ever since the market bottomed out, it printed the first wave of the new bull market, the second wave of overextended COVID bottom, the third wave, which is in the ascending direction, in the main direction, as the motive is an impulse wave. Okay, the fourth wave, corrective, in the form of a coil, in the form of a symmetrical triangle, no matter how we call that. Okay, and the fifth wave is already started. It has already been confirmed. So we are talking about the fifth wave. Usually Elliott wave principles tell you that there are 5 waves coming in the market to create and constitute a trend. Okay, 5 trends, 5 waves are what constitutes and creates the trend. And we are looking at the fifth, the final major trend. And the fifth trend, the fifth wave, is an extension basically of the third wave. So now applying the Fibonacci extensions, you can get, taking the distance from here to here and applying that, with the correction size of 50-60% in here, that is so like being tagged there upon the 50-week moving average. This gives you direct extensions for Fibonacci-based principles, Fibonacci-based sequence, at 1.618, 2.618, the 100% extension. This, guys, is what are the targets. If we measure the triangle size, the triangle base as well, the pattern base, then you have 29 all the way up to 65. This gives you $36,000 range. $36,000 range. This is well, basically the base size. So on top of the breakout level, you can add, which is the 50,000, you can add this $36,000 base size, and give you the expectation for the projected targets. And somehow magically it aligns very well, pretty nearly, with the Fibonacci extension. So this level of 85 all the way up to $89,000 is going to be very significant from my technical point of view. Once this one is cleared, perhaps some major decline in there, but the higher we go, the bigger the volatility, right? It's not going to be stable or like eternal growth. It's just going to be more and more choppy, right? The volatility is going to be insane. But one way or another, 1.618 gives you an extension of 127,000. 2.618 gives you $188,000, which is what I personally believe that the bull market peak may happen to be somewhere in there. Some choppy market phases, but I would not really just be, first of all, mad at the market for giving me something like that. I would not really be mad to see Bitcoin at $200,000 or more, but we also have to be realistic, right? So always try to be better, like be safe than sorry. I always prefer in the financial markets when it comes to trading, be safe than sorry. This is what keeps you proficient, and I should say profitable. Long story short, right? That's what the proficient traders do. They keep themselves safe. So knowing this Evergrande news does not necessarily kind of like impact, the long-term market directions. We can have a look and try to guess, try to anticipate certain levels based on the technical analysis charts, based on the volume weighted average prices indicators. Just like you can tell, this orange curve represents the volume weighted average price anchored ever since the $42,000 lows. Or okay, so ever since the breakout level, ever since the breakout level for the recent leg up that took us from 40s to 67, the new all-time highs. So I naturally take it as a very significant rally. Anchored volume weighted average price tells you about the fair price of Bitcoin based on volume and price being 5801. This is the fair price of Bitcoin. Okay. Then you had this pennant, this chart pattern of the bullish pennant with like pretty much showing off the consolidation, the very narrow consolidation, fast pacing consolidation after massive rally up, massive run up. This is typical to chart pattern that is known as a pennant or half mass formation, or also for the half mass formation, you have the bullish pennants or the bearish pennants, and you also have the bullish flags and the bearish flags. Okay, bull flags, bear flags, no matter how we call that. What matters though is that we saw this local breakout. Okay, this local breakout, and of course this strangely looking this Dart mole candle, literally with the flashing the liquidity on both ends, over leveraged shorts in here and here, taking over leverage longs in here as well. Okay. Well, this clears the market. This makes the market cleaner. This cleans the market, cleans it up, cleans up all the mess that the leverage actually does and commits to. Okay. But knowing of this, for price of Bitcoin being ever accounted since the lows of 40,000 being 58,018, we can also account the volume weighted average price based on the local lows. Okay. Where everybody thought that there was a fake breakout, a fake bull market breakout, whatever you name that. Okay. Everybody was bearish again. So basically, the average price of Bitcoin based on volume and price tells you that it's somewhere at 63,046. Okay, and if you look at it, then there was a perfect tap of this Evergrande sell-off on this Evergrande candle sell-off that tagged the support in there, which additionally confirms this level's significance from the technical point of view. That was a lot of volume. Okay, that was a lot of action going on. You can tell that also ever since this local final breakout leg up of the pennant, okay, the volume weighted average price anchor tells you that it's 65,210. Okay, so whatever happens, we saw this local fake out. This candle created a local fake out. Is it good from the technical point of view? Not necessarily. Doesn't mean bull market is ending. Definitely not. Okay, the best that I could see for the bears to justify any shorts, I wouldn't justify. In my opinion, shorting this is literal fucking suicide. This is crazy. I wouldn't never recommend with my own goodwill to anybody. This is suicide. Shorting bull market with the the most volatile leg up coming with the biggest volatility, shorting and going against the trend. This is like, you better give this money off to the charity, and then you can perhaps enjoy your life better. Okay, so we have to get some local stabilization, perhaps like this typical PTSD, post-traumatic stress disorder, as I call that. People after flashing the liquidity, after getting liquidation notes, they have to go through the kind of like a denial phase. They have to go through this depression phase where they have to understand and overcome the denial. Okay, firstly, when they see the liquidation note, they would say, okay, it's impossible. This didn't happen. It must be a mistake. It must be an error. I couldn't get liquidated. But guess what? If you pressed over leverage long or short, then you go liquidated, and it takes time to process that. And this directly shows off, to happen inside the candles as well. The candles show off the stabilization moments. Okay, so it will take a couple of hours, a couple of days for Bitcoin most likely to process, digest what's happened in here. Okay, you have the lows defined. I wouldn't expect too much of the price hunting, perhaps local, okay, fake outs, somewhere over there. Again, to flash the liquidity and get space for the big players to enter their money in the market. This is pretty wild if you think about it. By the way, how my screen still plays. Um, but everybody like listening to this grand opening for the Congress, for 500K Congress. This is like one of the main takeaways for you of this very first session will be, so that you do not want to pay attention to the intraday noise. You want to focus on the main trend direction, and you do not want to counter trade this main direction, because then you ask yourself, you expose yourself, you put your money at risk per your own wish. This is not what good traders do. I promise you. Okay, so give the market time to stabilize, to digest this denial. People would become more, how to call that, recovered, quote unquote. And if people as traders become more recovered, then the market recovers as well and becomes more, quote unquote, technical. I would not say it becomes rational, because there's nothing rational. I believe in buying Bitcoin at $60,000 right now. There was a lot of rationale in buying $3,000 Bitcoin or $4,000 Bitcoin at 60s. Okay, but still, give some time to it. The Bollinger Bands per the dotted orange curves tell you that the average volatility is places Bitcoin somewhere between $69,000 and $65,000. Okay, 64 more closely. So the average volatility for the next hours, for the next couple of days, gives you the range of Bitcoin somewhere between the $64,000 and $69,000. So you can expect the market to rally kind of like, back and forth in a form of this consolidation, okay, defined by the extreme high and the extreme low of this range. And honestly speaking, the only legit range breakout is when you see a range consolidation, whatever pattern it is defined by the highs and lows. The trend does not resume, the trend does not continue, okay, until you see a proper upside breakout and run the retest, which holds, okay, and lets you continue the upwards suppression of the burst from the bullish side. Otherwise, successful downwards breakout and retest is what signifies the risk of the market going down. But it's also very often, especially on the final stages of the bull run, that you see a lot of this liquidity flashing, just like I said in here. All of those longs that were pretty much having the supports in the previous local supports, under previous local supports, all those longs got liquidated. Okay, you can tell that by this long downside candle, a lower shadow. All of those lower shadow candles, they show the liquidity hunts, the liquidity weeks, people getting liquidated because the market faked out the movement. Okay, it dropped out of the range for a moment, dropped below the support, but it managed to climb back and close. Okay, this was the minimum price of Bitcoin that it for a moment had. This is the maximum price that it had within the session. So it tells you that it opened at one point. Okay, it perhaps rallied to some extreme point, then dumped, okay, and closed somewhere in here. That is basically how this drop candle looks like. And again, let the market consolidate, stabilize. Do not overexpose yourself to risk for the next hours, for the altcoins as well. For Bitcoin, just give it some time. Is this really a reason to close all your longs? In my opinion, that would be the dumbest idea that you could have. I highly do not recommend closing your longs because of this fake Evergrande news, which is a lot of confusion and a lot of mess. Okay, I hope this so far, guys, is very clear. Please let me know in the comments if what I'm saying is clear to you. If you are excited as I am about this 500K Congress, 500,000 followers on Twitter, this is something big, guys. I gotta be honest with you, and I always appreciate a lot of people, sharing the love out there with me. There's of course a lot of haters as well, but this is some tiny narrow percentage, like 1 or 2%, and 98%. All those beautiful people, all of you guys who are watching this, okay? And of course, as I always ask, this helps us grow our YouTube. So if you're watching that and if you enjoy the content so far, please make sure, guys, you actually press the likes, press the thumbs up, hit the subscribe button, smash the likes, hit some nice comments, okay? Leave some questions as well, because after this very Congress episode, this Congress grand opening starts, or should I say after it ends. Okay, I'll try to do my best to go through the comments and answer as many questions as possible. So leave your comments, smash the likes, and let's get it going further on. Okay. Well, if we give a deeper dive in the on-chain analysis factors, then, well, here's a mean hash rate, okay? 168 moving average of a hash rate. And the hash rate is basically, as Glassnode explains, I hope it's visible, okay? It's the average estimated number of hashes per second produced by the miners in a network. So it shows you the network activity, the miners activity, the network power, the computational power processed, okay? And used and utilized in the network at given time to produce the blocks in the blockchain of Bitcoin in this very context. Okay, so what you can tell, if we kind of like, just zoom it out a bit, then you can tell, of course, that well, this hash rate, ever since, of course, the China bans and everything, were kind of like had this exit from China. We saw a lot of FUD and China miners just leaving the country. And ever since the China crackdown on the miners, we have almost recovered completely. This is some big stuff, guys. Okay, this China news, new policy, new thought, it didn't kill Bitcoin, and it not only did not kill Bitcoin, it did not manage to kill Bitcoin. Instead, it's made it stronger, and it's stronger because the price is traveling already over the past all-time highs levels, and it's not even there yet for the hash rate that is used. So it tells you that the hash rate is lagging behind the price, and this shows you that the hash rate has more room for upside growth, and the price has even more room for upside growth, because if the price keeps growing with less engagement on the computational side, on the processing side, on the network, on the hash rate, okay, then it tells you that the market is stronger, the market is healthier, the market needs less computational engagement, less network power, okay, processing power to actually boost the prices. This is healthy. This is healthy, and this is exactly what will bring, in my opinion, the levels past the $100,000. This is pretty exciting. Again, the hash rate as an on-chain metric is lagging behind the price. The price leads, okay? But it is bullish because knowing the larger context of the new all-time highs from the TA point of view, from the FI point of view, from stock to flow model, if you will, as well, that gets you the digital scarcity model, or even the sentiment analysis, okay, intermarket analysis, where inflation, the yesterday's or 2 days ago, actually, the inflation 6.2 percent, either on CPI or whatever the metric was, 6.2% inflation in Poland. It's 6.8. We are standing literally at the edge. It's three times larger than they promised this would be. They always say in the media and the TV stations, the economists, so-called economists, and the TV station leaders, they always tell you, the politicians, of course, they always tell you that 2% inflation rate is healthy for the market. But who gives a damn anymore if it's 6.2? It's 3 times then as unhealthy as it should be, if you will. It's a huge failure. Okay, it's a huge failure, and only because the spending acceleration, the money acceleration is not really, the money velocity is not really this big. This is the only thing that stops us from this hyperinflation thing. This is some very, very risky stuff that they're putting us in. So the on-chain metrics are undervalued, okay? The price is getting stronger and pushes through new all-time highs, gives new market strength, despite it only uses a fraction of what is used before to make the new all-time highs. Similar story with the number of active addresses, 168 moving average, okay, MA. You could see divergences printing back then in the Birch divergence, so-called Birch divergence. It's not the same as the technical divergence, but it's still cool. And you could see the higher highs on the price action and lower highs on the on-chain metric on average. This is very significant because it was telling you that the price was making new highs, but the market was getting weaker. Okay, the market was trending down, lower, in the southern direction. On the on-chain side, the on-chain was dying and the price was growing. This was bearish. We have completely the opposite case right now. Okay, the price is already, as I said, past its previous weakness area. It's consolidating where it showed weakness before. It's showing strength where it showed weakness before. The all-time high, new all-time highs. This is technical strength, and showing this strength without even engaging as much active addresses activity, let's say on-chain activity of the addresses, engagement on the retail side, and not only. And it's already allowing Bitcoin to push higher. This is very bullish. Okay, we are pushing new highs with less engagement on the on-chain side. If you ask me, guys, this is pretty exciting. And honestly speaking, I couldn't be more excited about what you guys are going to also get for the next hours, days, okay, of the Congress, because we are going to we have already invited and confirmed like biggest names from the institutional side as well to come, to institutional speakers, the analysts, okay, beautiful, well-known non-chain analysts, hedge fund managers, like VCs. They are very significant people in the space, and they know very well, how it works on the institutional side rather than the retail side alone. So, I'm very excited, and I hope you're as excited as I am, because that is what you're going to get in the next days easily. But by the way, if you guys, like want to trade spot, okay, if you want to trade spot or want to trade futures, then I've got this very very good $3,500 deposit bonus on Bybit link. Okay, I've teamed up with Bybit, and I got for you, especially for the Congress, for everybody who joins with the link, and I put it in the description to this video, you can get up to 3.5K, $3,500 free of deposit bonus if you deposit the money under in the exchange. And I put the link in the description. If you want, that is actually what I'm using for trading. And if you want, just go ahead, use it, and you're going to get basically free money. This is one of the best deals I've ever seen in my life for this kind of like exchanges. So feel free to go for it. And if we go back to to what's relevant as well, okay, is this NUPL. NUPL is a huge warning for me whenever it crosses 0.75. Historically speaking, whenever it's crossed before 0.75 ratio for the NUPL, which is net unrealized profit and loss, then this informed you about the upcoming bear market, okay, or the bull market peak. You had very significant peaks in here. Let me show off all the marks. It was significant, like every significant correction was showing this NUPL crossing 0.75, and the higher it goes, the bigger, the more of the bear market it meant, right? Mid-cycle dip, if you will, as well, for the 2013 peak, okay, the bear market starting of the 2014, 2017 as well. So anytime, historically speaking, the on-chain has brought the ratio over 0.75, this basically gave you the exit signals of the market, at least to take some money and run. Okay, and the higher it goes, especially when it goes over 0.8, this is an ultimate infinite exit signal, in my opinion. Everybody, this is pretty clean signal for what I'm going to leave the market myself. Okay, so this also applies to like running away from the crypto. There's also in the next couple of months taking money out of crypto and putting into other undervalued assets, hard assets, gold, silver, real estate, and more commodity stocks. You will see similar signals, just for instance, for Litecoin. Okay, so everybody probably has already got to know, hope it still displays, everybody's got to know, about my Litecoin predictions for how I believe, Litecoin is going to be worth $1,000 or $2,000 in a very, very brief, matter of time. It's basically for how extremely undervalued Litecoin is. It's basically at its all-time lows against the Bitcoin strength. So Litecoin against Bitcoin is at its all-time lows, and it prints insane pumps already. It's printed like basically What? It's literally printed 50% move with like 2-3 days, 50% movement upwards in 2-3 days. The market cap increased by 50% in 2-3 days. Or maybe not 50%, but whatever like the market cap issue gets. I cannot even tell what current market cap of Litecoin is. I think it was like about 18, 20 trillion, something like $20 billion, something like that. I may be wrong. Check it up, if you will. What matters is again that we are showing insane technical strength on Litecoin as well. On the USD pairs when Bitcoin pumps, and it's still showing this massive weakness against Litecoin BTC, which means that whenever BTC gives away the exposure and gives the altcoin space to rally, the Litecoin is going to explode. The Litecoin is going to explode and go and pull off multiples against Bitcoin. So whenever Bitcoin trades up higher because of the superposition effect, by the way, I highly recommend you go past and scroll past to my Friday's webinar from the last week, which actually got amazing 105,000 views, more than first video for over 100,000 views on our channel, which right now should be crossing over 60,000 subscribers. Make sure you actually hit the subscribe button, smash the likes as well, just in case you haven't. Okay, and I mentioned and explained there the superposition effect. I highly encourage you go in there and check it out. I'm not going to repeat this at this very moment, but all I can say is this massive divergence that you see in the bottom part of the chart. Okay, this is some 2-year long bullish divergence. This is the largest bullish divergence I've seen in my entire life for any crypto asset. I promise you that. Okay, this is pretty rough. So what I believe is going to happen to Litecoin is basically showing you a visual representation of this. Okay, consolidation breakout already happened. The breakout is here. Maybe some local retests. That's the path that I want to see for the Litecoin to follow. And if Bitcoin, let's say, pulls 2-3x from here to this $120,000-$150,000 or more, then Litecoin would pull 2-3x from here as well, which places you somewhere between like $500 and $600, if not more. Okay, that already, assuming that that Litecoin against Bitcoin pair stays flat. But on top of that, Litecoin against Bitcoin may increase substantially, 10x or something. Maybe not 10x, but like 5x. Okay, then this 5x gives you multiple with 2-3x already, and it results in having 10 to 15x from current prices of Litecoin. $100,000 to $2,000 is pretty much given, in my opinion. Okay, even if we go on some lower altcoins, just like Step Finance, of course, it still came back into consolidation, made a failed swing in here locally because of the Evergrande news. So it instead marks the new high. It still is encapsulated inside this consolidation, this contracting consolidation of a symmetrical triangle. A lot of similar patterns: symmetrical triangle in here, consolidation; symmetrical triangle in here, consolidation. Okay, so it tells you a lot about how altcoins are generally kind of like holding back right now. This is pretty exciting. The altcoins are holding back, everybody. This is something what makes me think that the altcoins are going to pop in this form of ultimate alt season coming once the Bitcoin peaks and tops. And if you ask me, everybody, I'm going to get the best tips for you in the next videos, in the next streams. I'll make sure to cover that, for my own workshops, for other workshops that you're going to also get for this 14-day free trading congress. So if you have not signed up yet, okay, make sure you actually go and sign up. I'm going to also put the link in the description. It's free of any charge. More than 30 live streams, broadcasts, trading sessions, interviews, AMAs, no matter how you name that. Again, certified market analysts, the professional workshops, the institutional analysts, the institutional on-chain analysts, the hedge fund managers, all of those people have come here to join our all mutual beautiful forces to create and combine it to get you the best quality 10 out of 10 content, top-notch, A-rated content knowledge for traders. 14 days free, 14 days for free, guys. This is unprecedented. 20,000 live participants is what we have confirmed for free trading congress of ours. This is Third edition and 20,000 live participants. Like, I'm fine with that, guys. I'm really cool with that. Okay, so even if we go and have a read on the Ethereum chart, let's see what it shows. Where it pops up. This is basically some older chart of September, as far as I can recall. You can tell that Ethereum is getting stronger as well. Okay, the Ethereum is getting stronger, it's pumping, and even if you add the volume weighted average price on the weekly time frame, it's going to tell you that the average fair price of Bitcoin, of Ethereum, is 3,800. So it has very significant support in here. I wouldn't expect it, to just slash back just like the bears would dream of that. But instead, it's showing you very significant power. It's showing you very significant strength with new highs. And same story. I do believe that Litecoin, just like Litecoin, Ethereum against BTC is actually forming a very continuation pattern, the symmetrical triangle continuation pattern. So the moment you see a breakout, okay, out of it, it's going to give you the 0.3, like literally 3 kind of like steps upwards, probably towards this level based on the measured rule. You add the base size breakout on top of the level of the breakout level, okay, which places you somewhere in here. So even if you add the percentage, if you measure the percentage, okay, this is like 50% upwards, and this 50% upwards at the like mild case, because it still has, in my opinion, like 100% upwards, so double whatever Bitcoin pulls against USD, like 2-3x. Ethereum can double that from current prices. So Bitcoin pulls 2-3x, Ethereum against USD pulls 2-3x because of superposition effect, which already gives you basically targets between $10,000 and $15,000, and on top of that, you double that from the BTC purse whenever the Bitcoin just pops and blows off. That's why I'm thinking Ethereum is going to get you the targets of $20,000 to $30,000. This is pretty crazy. This is pretty crazy, everybody. And I also want to kind of like remind you while nearing the end, because you already know what to expect. There is insane amount of knowledge, insane amount of free webinars, log workshops, streams from the biggest people in this space, from myself, from my team, all day long, with 14-day free premium membership to every single corner of the Birb Nest. Okay, you're going to have the admission free of any charge to come and see and participate in the Birb Nest, in one of the largest communities ever on the world of this kind. We've been through the bull markets, through the bear markets, ever since 2017, when 99.9% of other similar communities, they either have evaporated, they exit scammed, they disappeared, they literally broke their asses down because of counter trading or leverage trading, which was pretty poor results. And we are here, and we are ramping up the numbers like crazy. And because of that, all those beautiful 20,000 live participants to this beautiful 14-day free trading congress have the chance to also take part in this giveaway that we are having. And every show will have a special giveaway, just like this one. You're going to have a special giveaway, and I'm going to put all the content for the giveaway, all the links, all the information in the description to the video. And this is what is going to happen throughout the entire congress. Every webinar, every workshop will have its own giveaway. So I want you guys to take care and to take care of these giveaways for yourself, for your own sake, because you can win shitloads of money on that. This is basically free money, and we're giving that away. Okay, link in the description. At the same time, next to the Bybit link, where you can get 3.5K USD free deposit. Okay, this is when you sign up and join in there. Deposit some money, you can they usually give you and reward you for free with free money for that. I cannot think of better deals on top of the free knowledge. Kind of reminder to smash the likes, hit a subscribe button, because that is definitely what kicks off our YouTube algos. Leave some kind comments and questions as well in the chat, guys. And remember to ask the questions, because we are going to cover them, if not on the show because of the time limits, then off the show, off the records. We're going to keep them coming. Make sure, guys, you actually are part of the Congress. And if you are not part of the Congress for some reason yet, I want you to go to 500K website, okay? thebirbnest.com/500K. thebirbnest.com/500K. This is where you put in your email address, your first name, we're going to get you in your mailbox all the links, all the instructions that you're going to need. And if you go and join there, if you go and sign up in there, you're going to naturally automatically participate in this 14-day free trading congress, because guys, that alone is an amazing value and will help you prepare for what's coming. Okay, it helped prepare already people. It helped, to so many people prepare in the past to get the longs into 100, into 30,000, to the 40,000s, when everybody was expecting $5,000 targets in bear markets flowing. I was there letting people buy that. Okay, and they bought $30,000 and $40,000 for Bitcoin. They bought Litecoin at $140. They bought Ethereum at $2,000. Okay, and right now you have the chance. You're going to face the challenge and chance on how to profit and benefit the most out of the upcoming final fifth wave of Bitcoin, the final leg up, which is already confirmed, and it's coming, and it's going to take you somewhere into 100, 150, or even $200,000 region. Litecoin, $1,000 to $2,000. Ethereum, $20,000, $30,000 even. All of those insane ultimate alt-season rallies are going to come, and your chance is to learn how not to screw this up without any help. I promise. And if you are new to this, and there is a high chance most of you are new, and if you are new to this, if you just opened the first account, if you've just get in the market, you've just got in the market because you saw your friends getting in, the media telling you about that, then I promise you there is 99.9% chances you're going to screw it up, blow up your accounts when the things go south. And this Congress is going to help you counter trade your own emotions, get you the rationale that you need for the technical analysis and the markets for its trading, and get you literally safe, secure wealth generation. This is pretty amazing. Generational wealth. And you're going to learn and grab all the insights, all the tips from the biggest certified traders, certified analysts, the institutional side investors, the hedge fund managers, the biggest insiders. They're going to tell you. If you are part of the Congress, go ahead and stay tuned for the next shows, because what's coming is going to literally blow your mind. And this very grand opening, everybody, for 500K Celebration Congress brings to you this very first session. And I am extremely excited. I couldn't be happier and couldn't be prouder of all those 20,000 people who have signed up. If you have not signed up just yet, I showed you how. Go to birbnest.com/500K Congress. Leave comments, hit the subscribe button, smash the likes, leave the questions. We are going to go through them right when the show ends. And everybody, this is all that I've got for you. I need to rush. I need to run. And I'm so excited. What's coming is going to blow your mind, guys. Stay safe. Get yourselves ready, because the next days of the Congress are going to be mind-blowing, are going to be crazy, are going to be helping you watch and decide upon the market, pulling off multiple X's, insane profits, ROIs. That's all of that is going to happen throughout the Congress. Enjoy. I see you on the next shows. Remember about the description links for the Bybit. Remember about the description links for the giveaway. Free money everywhere. 14-day free trading Congress is officially going live. God bless you guys. See you on the next workshops. God bless and bye-bye.